Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'm going to interject my financial opinion, generally related to three different topics: wealth building, commodities, and/or financial topics. So we're going to dive in there. We're going to take a look, see what people are sharing, and I'll share my opinions. If you want to follow me at Finance, if you want to join our community, finding-value.com, where I dive deeper into all of these topics, looking for potential investment opportunities across the board. Right now, I like commodities just because of how cheap they are, and I'll show you how cheap they are versus other financial assets as we go through this Twitter, because I did share that. So Bonnie, she says, moment of truth, the NASDAQ composite trading at resistance at 3:15 p.m. Eastern Time. The downtrend remains in effect, which is the green line here. Now, I know we saw a big update today, which is August 8th, which is Thursday. Are we going to turn higher or do we still have more downside left? What she has on this chart is resistance going across, and we're below that resistance. We're below the green trend line. We've got falling momentum still, and this is usually a dangerous area to try to pick off a bottom. And we also have a downtrend still established here. So we'll see what occurs. Calling bottoms is incredibly difficult, and we still have a lot of upside resistance ahead of us. I'm curious to see if we see further selling pressure in the NASDAQ or if we can reverse this momentum and turn on higher. Very interested in seeing what turns here. Isabel Net says recession. The current market implied probability of a U.S. recession occurring within the next 12 months stands at 41%, which is quite high by historical standards. So this is looking at history. This is the Bloomberg consensus, which was at 100% in 2020. We came all the way down to a very low area in 2021, creeped back up to a pretty high area, over 60% in 22, 23. And now we're back to 30% for the Bloomberg consensus medium. And then the market implied probability is 41%. Goldman Sachs forecast is at 25% of a recession occurring within the next year. What I do look at, I look at the yield curve, I look at unemployment, I look at the SOM rule, I look at all those things. And a lot of them suggest that we could potentially have a recession out there sometime, or we're actually going through it, depending on what you use for your data. And a lot of people will bring up the fact that the data is kind of cooked, that we're using garbage data, and the garbage data in means garbage data out. So that's what makes this call a little bit more difficult. I know they're playing with the yield curve. They're releasing a lot of short end bonds, probably to keep the short end of the curve higher and keep it inverted. There's a whole bunch of things that are going down with adjustments in inflation, a lot of things going on, even with the employment data. So, how can one get a correct read of what's going on if all of the data has been cooked, so to speak? Some people have brought that up. Matt says 95 stocks in the NASDAQ 100 are positive today. That's the best day of breadth in 2024. So there's the number, 95. This is 2024 going back, and that's the highest level of advances. 95 out of the 100 advanced today, which is usually a good thing if you're trying to find a bottom. So some evidence here that maybe the NASDAQ has bottomed, but we still have those big negative bearish engulfing candlesticks that are still hanging over us the past few trading sessions. Here's the yield curve. It says historically, inverted yield curves have often signaled impending U.S. recessions, making them a crucial indicator that economists and analysts closely monitor to evaluate economic conditions. And we are inverted. We have flattened the yield curve. And when that uninverts, that's when you get these moves lower. And you can see we've been inverted for a long time. Those are those blue arrow or blue tick marks up here. When this comes and it turns and goes down, that's generally when you are in a recession. We have flattened, and we don't know if this is going to come back down. So we're riding riding right on the edge here, guys. Right on the edge of a potential recession, maybe. Here's the CRB commodities versus S&P 500. The CRB index versus the NASDAQ composite as well. Perhaps the Booty W bottom could be established soon. And what we see here is you hit support, comes down, bottom one, comes up resistance, bottom two, and we would be very close to the ultimate bottom here of the CRB versus, I don't know why we have Como here. Never mind. We should go to this one. Oh, commodity. That's why it says Como. The commodity index right here at the bottom. The other commodity index is doing another bottom. So we come in, hit support, come back, resistance, come back, and a double bottom. So we're putting in double bottoms potentially for commodities versus S&P 500 and also the NASDAQ composite. And I hope that's the case, guys, because if you are in commodities and you're buying this bottom here, or you bought in this bottom here, you bought the bottom of the market for the most part against other assets, which is fantastic. Because if we come back up to levels that were back up here, oh my goodness, that's going from 0.004 to 0.02. So call it 0.00524. So it's going to be a 4x outperformance going up to that area here. Coming down to Casper, he says, what's the hidden investment that no one talks about, but will perform really well over the next 5 years? Only charts, no FA, no stories. The only thing that I will say is look at the dollar, watch the dollar fall, and look at other currencies. That is the key to unlock my opinion on what will outperform over the next 3, 4, 5 years. It's going to deal with currencies, and I think the dollar is going to drop. So with the dollar dropping, commodities are priced in dollars, and then there's all emerging markets. There's all sorts of things that could do very well with the dollar dropping. Precious metals priced in dollars. The gold-silver ratio spiked to 120 during the last recession, then swiftly fell to around 60. It's always interesting to keep an eye on this. There is a comment that I want to make. This ratio for the physical metal never got to 120. Never got there. It never even got over 100, I don't think. I tried to buy the physical metal, silver, at this time, and you couldn't buy it anywhere near the price of 120, the futures pricing. It wasn't even close. The premiums all got jacked up. Not even close to that 120 level of gold to silver. So the futures pricing could easily be at 120. The physical pricing never got there. At least I couldn't get it, and I tried to get it at that time. I did get some from private sellers, some really good deals, but I couldn't get 120 to 1. This chart's wild. Canadians are drowning in taxes. The average Canadian family now spends $47,000 per year on taxes and $13,000 per year on food. That's 3.6 times more on taxes than food. The average Canadian family now spends $24,000 per year on shelter. In other words, the average Canadian family now spends double their annual shelter costs on taxes. Since 2010, the average annual tax bill for a Canadian family is up a whopping 57%. Truly concerning numbers. Well, I can tell you this, guys. My taxes are way more than my shelter cost and my food costs. In fact, I pay more in taxes than my food and mortgage combined. I pay more in taxes than my total expenses in a year. What do you think of that? Great, huh? Absolutely fantastic. And yes, I think taxes are out of this world. I think they're absolutely ludicrous, in my opinion. We continue to stress that Cape size rates are more than twice as high as they were a year ago, And that fleet growth over the next 12 to 18 months at least will remain modest. Barring any complete collapse in China, we should still expect positive seasonality effects through quarter three, and using the FFA curve right now, we see 30 to 40% upside to consensus second half estimates, says Pareto. So looking good for Cape size rates. Brandon says Glencore CEO Gary Nagel knows the ESG game. It was never about climate change or green energy. Like everything, it's about money. The pendulum has swung on ESG over the last 9 to 12 months. Investors still recognize that cash is king and that it is always the case. So this is him. The pendulum has swung on ESG over the last 9 to 12 months. The investors still recognize that cash is king, and it's always the case. U.S. shale gas has grown from tiny volumes to a dominant energy source. So this is monthly dry gas shale production out of Shale, billion cubic feet per day. And look at the growth here from 2007-8. What scares me a little bit here is how sustainable is this? I mean, we've grown this rapidly. Do you think it could rapidly fall? And if it rapidly falls, what does that mean for natural gas and all the infrastructure that we are building around natural gas? We heat homes with it. It's 41 or 2% of total electricity power production. And what if this rolls over? Like, I always think, like, man, how can we continue to just ramp this stuff? And do we have enough reserves to continue to ramp the flow rates? Reserves does not equal flow. Flow can be constrained by how fast you can get it out. And you can have a lot of reserves like oil sands, but it's really difficult to ramp production quickly in oil sands. Or I'll say there. The perfect recipe for an increase in overall commodity prices. So hedge funds turn bearish on commodities, and look how low this is compared to stuff in history. When the money isn't there, that's when you usually should be looking. And maybe we already went through a recession. Maybe these numbers are cooked and the slowdown's behind us. We'll find out. Grady says silver has positive divergence on the RSI indicator and is now trying to break back inside the blue bullish expanding falling wedge pattern. Well, that's a mouthful. So we have a nice big bullish engulfing. It's back within this expanding wedge pattern, and hopefully we can get some liftoff here for silver. I'm an incredibly big silver bull. I think gold and silver are going to do very well with money debasement, with potential slowdown. Things are lining up for it. What I'll have to say there. Here's another silver one. Silver, there were not many buy signals in 2024 on this indicator, but when they arrived at a distance of 1 to 4 months, the rise was always very strong. Will it be the same this time? Think about it. So they had a buy signal here, big move in silver, another buy signal, big move, 12.8%. Buy signal, 24%. We had another pivot buy signal, 43% there. And now we have another pivot bull signal or buy signal here, which is showing up right now for silver. And with the bullish engulfing that we got today, I'm pretty bullish here, guys. I think it's going to do very well and move on up here. So I'm a bull. The 2-year yield is now 1.56% below the Fed funds rate. Historically, this supports the beginning of a Fed cutting cycle. So what he's got here is the 2-year yield subtracted from the Fed funds rate, and there's the difference there. Whenever it's negative like this, they've always started a cutting cycle. So we could very easily start a cutting cycle here at any time going forward based off of this data here. So we're probably going to be entering a cutting cycle here any second. Bobby says every few decades, we experience a cyclical shift where investors transition from overweighting U.S. equities to reallocating more capital to other regions. And this trend continuously reverses. Often investors overlook these crucial moments when capital begins to shift dramatically. But it appears we are currently experiencing one of these significant turning points. Foreign investors in particular have reached a saturation point in U.S. equities, resulting in some of the most extreme valuation disparities compared to businesses in other parts of the world. This is not the time to try to be a hero in US stocks. There are numerous other outstanding opportunities with significantly cheaper valuations and more promising growth expectations compared to US stocks, which are already priced for perfection. In my view, this coming decade is likely to witness one of the most extreme rebalances of capital away from the US and towards the rest of the world. And this almost always occurs under two conditions, in my opinion here. Weaker dollar against other currencies. This is when this thing lights it up to the downside. And commodity bull market. Remember, commodities are priced in dollars, so it's ultimately the dollar dropping. And that usually falls with interest rates. So this is the capital allocation. I think people are off sides here. I'm actually looking at a lot of foreign equities right now in emerging markets. Lots of opportunity here. Lots of opportunity for long-term investors. But that's what I've got for today, guys. So give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. Mayday coupon code if you want a discount, if you want to join our community. And that's what we've got for today. So I'll end it there. We'll catch you next time. This is Finding Value.